Hello, everybody. How are you? John Napolitano here with you from Top Trading Pros. I hope everybody's having a fantastic day. Reason why I wanted to create this video was because we have a very interesting week ahead. We have a very data-heavy week this week. We have the Fed meeting on Wednesday. We have some inflation data, CPI, coming out on Tuesday. So there is going to be a lot of moving around this week, most likely. We also have quadruple witching on Friday, which is when all futures as well as option contracts expire in one day. So you are looking at a storm of information that could potentially move the markets this week. So what I wanted to do was create a quick video to talk a little bit about how you trade in an environment like this. New traders, sometimes they live in a bubble each trade. They basically put a trade on, and basically what they do is they hope it goes up or down or sideways, whatever it is they're trying to do. But what they don't realize is that your trade doesn't live in a bubble. Every trade that you do affects every other trade that you do. So especially with trading options, if you're trading in a basket like I do, where you're trading multiple things at once, it's very important to position your portfolio the right way into a very volatile week. So what I'm going to do is I'm going to jump into it and just show you a little bit about what I'm talking about. As we're speaking right now, I'm looking at the futures market right now, and you can see that the NASDAQ is poised to go up more than 1% this morning. And there's really no news. Basically, what I think is happening is we're forming something of a little bit of an exhaustion top, a blow-off top, where basically the market's exhausted and all the short sellers finally capitulate, and you have a situation where it's very potentially going to roll right back over. That is what I'm anticipating. At some point, there has to be a pullback. I don't know when that pullback is going to happen, but the heavier the market gets on top, the more you have a likelihood of a very substantial correction. So that is what I'm that's kind of how you have to assume or set up your situation for this week. There will be some volatility, and that doesn't mean that we can't rip higher. It doesn't mean that we can't go down and then the markets level off and go back up. That's kind of what I'm anticipating in the next days and weeks to come, because we are in quite an uptrend, as you can see in front of you right there on the NASDAQ. So let me give you like a quick example of what I'm talking about, how to set up a trade in a situation like this, because call and puts simply won't work. When you're looking at a situation where the VIX is at 15 here on the 1 month, and even on the cash VIX, it's below, I think it's at 13 or something like that. So it's really getting overextended to the downside. And when you see the fear gauge completely complacent like that, that's telling me that we're at like peak complacency right now, and that makes me a little nervous as a trader. That makes me kind of cautious as far as like where I'm putting my risk capital and everything else. But that being said, you don't want to sit on your hands. So there are option strategies that I've developed and that have worked over time that work for situations like this. One of the ones I want to talk about is something where you're selling credit against what you own. And we talk about this in our classes. If you have any interest in learning multiple leg option strategies the correct way, spend some time on our website, toptradingpros.com. You can purchase information, or you can actually take coaching calls from us. I give 90-day as well as annual memberships as well, if you're interested in that. But for the near term, if you want to like and subscribe to this channel, if you want to check out our website, we have plenty of free content for you guys to get your feet wet and to learn at least how some of these strategies operate. So basically, you're looking right now at Boeing, and as you can see, it's been range bound for several months. I kind of drew those lines where it's been range bound between kind of 195 and 215. As you can see, as we're speaking right now, as of Friday, it broke out past its channel for the first time in an extremely long time. So the question is, will it continue to break out, or is it going to be just one big fake out and essentially roll back right into that range? And if I pull up a whole bunch of charts, there are a lot of charts that look like this, stuff that's been kind of chopping around, going sideways, not really sure what to do. Well, when you have a situation like this, there are option strategies that you can implement, which I'm going to show you a quick example of. In a situation like this, you would want to either do a calendar spread or you would want to do a diagonal spread. Essentially, what you're doing is you're going long the call option all the way out to, let's say, July. You're giving plenty of time for Boeing to break out of that channel. But the question is, if you do that, you're risking $900 in this example. The 1 month call options out to July are going to cost you $900. So if you do that, if you buy the 215 call options, it's really wise in the near term to sell something against it. This way, this week will kind of come and go, and you won't have to worry so much about, oh my God, what's going to happen to my $900 or my call option. So one of the things you can do, and this is the setup that I show you here, you could sell something like the 116s. I'm sorry, the June 16th, which is expiring this Friday. You can sell premium against your existing option. So these are all types of strategies we teach in our classes. This is an example of a diagonal spread. And if you look, it might be hard to see, but you'll notice that the cost of this trade is $691. And the reason why is because essentially, if you go to the option chain, you're collecting for the 220s here, you're collecting a pretty, oh, these are the July 14th. Let me go down over here first. What I'm showing you, the 220s, you're going to collect basically a $215 credit against right here. You're paying about $900, like I said, for that July option. So instead of paying $900, guess what you're doing? You're paying $600 basically. So you're cutting your risk down by 1/3 just by implementing this strategy. Now, if Boeing rips out of its zone this week, you're not going to make your full upside potential, which is okay, because guess what you can do? Then there's other strategies you can do to handle a breakout situation where you might be short an option contract. So these are more complex strategies. We talk about them in our classes. We go over them every single week in our coaching calls, and we go over the right strategy at the right time for the right type of market that you're dealing with. In a crazy volatile, potentially volatile market that we're going to get this week, these are the types of strategies you need to implement. But most importantly, you have to know how to do it, when to do it, and in what sector to do it. If you're looking in AI, if you're looking in technology, all the hot sectors that have been going on lately, those probably aren't the places to look. I picked on Boeing on purpose because the industrial sector is my favorite sector for this week. Why is it my favorite sector this week? Well, it outperformed the most in the last couple of days, and I think it's going to continue. That is what happens following top-down analysis, following the charts, and letting the market dictate to you what you should be doing is the right way to trade. So if you want to learn about this stuff, spend some more time with us. Go on our website, check out some of our free content. We're always posting stuff on the forum. You can feel free to watch that stuff and interact, as well as purchase some education if that's the road that you would like to go down. If you have any questions, we're always here for you. And please subscribe and like our channel if you want more videos like this. We're going to keep creating free content for those who are interested in options trading the correct way. So I hope everybody enjoys the rest of your week. Be careful out there. Like I said, we have a very data-heavy week this week. And just always manage your risk and be careful first and foremost, and you will do fine, okay? So enjoy the rest of your week, everybody. Take care. Bye-bye.